So we did till 6 social security. Now, next we will be starting is the capital gain or loss, for which we need Schedule D, and we may require schedule form 8949. Okay, if there is any sale, and then of course capital gain is when you sell, and if there is any gain or loss on the sale of the capital assets, right? So if you have the list of the assets that has been sold, then you may have to use this Schedule D and 8949. But if there is any single capital gain, then you can also straight away enter the amount in line 7 and tick here. And okay, uh, if not required, just tick here that Schedule D is not required. Okay. Most of the time, Schedule D definitely will be required, and most of the time, even if there is only one sale, it is advisable, and you should make it a practice to attach the schedule, because more disclosure you make, more less notice will be there from the IRS. Okay. Now, here, if you see, before moving into this whole topic, first let's understand what is capital asset. What do you mean by capital asset? So there can be three types of assets. One we know capital asset, another is ordinary asset, ordinary income asset. So ordinary assets are like inventory, like you sell and get the ordinary income, right? Then we have business assets. Okay. So business assets, so basically are nothing but assets that we use for trade or business. So those assets which we use for trade or business are known as business assets. Lastly, we have capital assets which are not covered in these two. Those are known as capital asset. So mainly it will include, first of all, personal assets, personal use. The assets that you use it for personal purposes. Those will be considered as the capital assets. Or if you have purchased the asset for investment purpose only. Okay. So for an individual, it can be personal use and investment purpose. For a company, obviously, there might not be a personal use, but there will be an investment purpose. Okay. So that's how the assets are segregated. Now, why we need to segregate in this way? Ordinary asset is fine. We know that, okay, it is like an inventory. You buy and sell and gain the whatever income you are earning. That is your net profit, that you will show it in the net income, net profits only. About business asset and capital asset. So if there is any asset that you are using for business or trade, there is a concept wherein you have to divide the asset, the gain or gain value between ordinary gain and capital gain. So in order to divide between ordinary and capital gain, you need to segregate, you need to know the difference between capital and business asset. Firstly, the difference is for long-term assets only. Okay. For short-term asset, because short-term capital gain, so short-term, so capital gain can be, obviously, once you sell the capital assets, there can be either gain or loss on the sale. So capital gains, if it is a short term, that means you have held the property only for a year or less than 1 year. In that case, this short term capital gain is also considered as an ordinary gain. There is no separate calculation for taxes for short-term capital gain. However, if we talk about long-term capital gain, we have separate calculation. Hence, to differentiate between ordinary and capital gain, only long-term capital gain needs to be taken into consideration for this business asset and capital asset. Okay. Now, um, wait, let me see. So, if you see Schedule D, now how to fill this form? For this, the source document that you will receive might be Form 1099B. So this is Form 1099B that a client can give you, which is submission of all. So this document is submission of all, like 1099 DIV, MISC, INT, and 1099B. B means for broker, right? So here, if you see this summary, this is the source document. Now this matches with this. This, right? Box A, box B, box C. We have box A, box B, box C. Short and long, box D, E, F. And if you see D, E, F. Clear? So first thing is very easy, that whatever amount is here, these should match in our schedule D as this, totals of box D, E, F and A, B, C. Now what does these boxes mean? So meaning may not be necessary, because obviously you have to just cut, copy, paste. Whatever the broker is giving, that you have to report it as it is, right? But box A and box D includes the basis, so these proceeds or the cost basis. So whatever amount is there in box A and D, that has been reported to the IRS by this broker. That means IRS knows about this, that this is the cost basis. So you can never change that, right? Box B and E are those which says bases are not reported at all to the IRS. So this cost basis is not reported to IRS. It is reported only to you. Okay. Then there is Form 1099 not received. So this Form 1099, this is Form 1099. So let's say this section is not there in this total form, and only summary is provided by the broker. In that case, this amount will be reported here, that you have not received any 1099. Only the summary is given by the brokers. So at that time, it will be reported here, right? So this is one thing that you can straight away enter the values here. Now we'll go deep into it, like how or what figures will be added, right? But this is how 1B, 2 or 3 will be filled.
So is it possible that in the case of long-term gain, all D, E, and F, all three boxes can be filled? It is possible?
Yeah, it is possible. That's totally possible. They might have reported some, they might have not reported some. That is possible.
And some might have come as a summary, not in detail, right?
Yeah, that is also possible.